Mike, I want to ask you, I did a video on this recently and trying to figure for a new investor, how many markets do you think a new investor should concentrate on for virtual wholesaling, or do you think it should be unlimited?
It's a good point. One is, what's your marketing method? If you're going to do marketing to home sellers, so online, offline marketing, whether it's mail, postcards, pay per click, I would start with 1 to 3 markets.
Exactly what I said.
Because you're going to need people in boots on the ground to do that. It's a totally different business model. Now, if you don't want to do marketing to home sellers and just want to go after vacant properties anywhere in the US, then the answer is unlimited, right? That's the kind of like the auction method that we use, or buying from wholesalers or buying off the MLS, where we actually don't do any marketing to home sellers. That allows you to expand to be anywhere in the US basically as an option. And so you got to figure out what you want to do first. If you want to be a guy that drives around and hangs bandit signs and does all that fun stuff, I would start small and go into your local market, or pick another market in a different state, and then get a little comfortable, add another one on. But you're going to need teams in each of those markets, acquisition guys in each of those markets, et cetera. So think of that when you're structuring, because it's a different business model. Whereas when you and I do it, it's no marketing to home sellers, and we just, does the numbers make sense? Yes or no? Sure. Buy it as a wholesale, and buy it as a buy, renovate, and resell. And as we build a team in there, then we'll start talking more bigger projects to do, and or rentals, because now we have boots and a team in place in that area.
Right.
Great example is Wyoming. 18 months ago, nothing, right?
Right.
We did some wholesale deals in Wyoming. We did some buy, renovate, and resell in Wyoming. And now there's a 12-unit apartment building being renovated by us. You know what I mean? Right. So it's all those things, start out small, less riskier from a wholesaling into rehabbing, and then into bigger projects once you have a team in a new market. And, that's all can be done relatively quickly.
Totally. I agree 100% with everything you said on that. And basically what we do is we could be in 5 to 10 markets at any given point, at any time, but we let the deal dictate what markets we're in, rather than just picking markets, and we develop boots on the ground. So we're in a market. All right, now we figure out, a lot of times contact an agent out there who's a small brokerage who knows that market really well. We find out if they're good. If they're good, we use them potentially to resell the property, or at least give us contractors to let us know what we need to do to renovate the property. Like, for instance, the one in Florida, we didn't know it needed it was cockroach infested, right? So he was there, he saw it, and we have a company out there taking care of the cockroaches before we sell this property, and we'll clean it out too.
Yep.
So having boots on the ground, it becomes secondary for us. We first have the deal, we develop the boots on the ground, and if they are good, like this guy definitely appears to be a really good agent, we'll try to do more in that market. We will definitely try to do more in that market, whether we make more contact with other wholesalers in that market, or we just come across new deals that are within an hour, say, of that market through our auction method.
Yeah. So. And then in that Florida example, right, we bought it from a wholesaler. I interviewed a few different agents. I picked this one who's also an investor agent.
Yeah.
Great work ethic, very knowledgeable of the market. And, he goes in to take pictures. He mentioned ahead of time I saw some cockroaches when he inspected the property for us.
Right.
He didn't know it was that bad. And then once the sellers moved out,
then you
off
see
the light for a few days, it's all over the place. So now, he basically set up the pest control for us. His assistant did all that work. We just paid, and getting that fumigated collar right now. And then we're just going to relist on the market as plan A. And we know plan B is going to be called like more of a hotel. We'll put 20K into it, and we'll walk away with maybe the same or maybe a little bit more doing that as well. So we have 2 good options. And now we have a stud agent in this part of Florida where he's going to prefer his future deals too as well. And we'll tap into his market for more projects in that market.
Totally. He knows we're cash buyers. So if he comes across something, he might just reach out to us, say, hey, got this one. They're asking this much for it. You renovate it, we could sell it for this much. So he's doing all the groundwork and all the legwork for us with that. And that's what you want to develop when you go into these different markets. That's why it's super important to make contact with an agent like that when you're going into different markets, and then hopefully you develop and then you get more and more properties from them down the road. No, super, super important. So like I said, same thing. I think it was pick 1 to 3 markets to focus on if you're going to do the pay-per-click, if you're going to do direct mail, and you're going to do all that. But then if you're doing that, you're going to spend 5 to 10 grand a month on the marketing, right? You're going to spend that. Plus you got to have boots on the ground. Then you got to have an acquisition manager. You're going to pay anywhere from 12 to 15%. Then a disposition manager, they're going to pay that same 12 to 15%. And before you know it, your margins are all cut down. Or if you use our method with what we do, our acquisition agent is us. The disposition agent becomes the realtor if we use it and list with them. And they also become the person who helps us with the renovation should we decide to do any renovation with it.
Yep.
So, and again, into the virtual wholesaling, we've almost turned our model this year into a virtual wholesaling model, right? Because with less inventory, we're trying to maximize what we can on each of these deals. So instead of taking 5 or 10 or 15 on these, we're trying to get 25, 35, 45, 55 if we can on these deals. So we're just trying to maximize what we can, wholetailing as much as possible without full scale rehab. So I do think that's a good model to have. And it's something you always want to look at. You always want to look at what? Wholesale first, wholesale second, look at the owner finance if it's feasible. But if you're into it for too much money, you probably don't want to do that. You use your smaller dollar amount ones, your $5,000 to $40,000 range for your owner finance. Then the rest of them, you try to wholesale or fix and flip, I think,
Yeah.
At that
Working
point.
well for us.
Yeah, totally. So, let's get into, a lot of people don't know what MAO is, maximum allowable offer. So let's kind of use that, for instance, with that Winter Haven property. I think, what do we come up with? Around 185 as the after repair value on that one?
Yeah, I mean, probably for a full rehab, the hotel would have gave us 170, if I recall correctly.
Yeah.
So call it 190, 170, I think it was about the ARV or after repair value for a full rehab was probably 190. A middle of the road rehab or hotel was like 170. We were conservative. We were thinking like 155 to 160, but speaking to he was an investor as well, said, nah, if you do that, you would get 170.
That's always good. Like we are always trying to err on the side of being conservative, just so it doesn't bite you in the butt of market change, right?
Yeah, if it's a surprise, I want it to be on the upside.
Yes.
Totally. Perfect example, the North Carolina rehab.
Totally. I was thinking the same thing.
We thought we were going to sell it for like 120, 125 max.
Yeah.
It's listed in the 140s. So it's like just by the rehab delayed because everything is in the supply chain is delayed. Windows aren't there yet, things like that.
That's where being conservative helps.
Yeah. We were okay with that, the 120 number. Now it's, it's a plus side, anything above that.
Totally. It was funny. As you were saying that same example popped up in my head, the Laurinburg, North Carolina property. So knowing that, let's say 170 is our number and it needs, call it 15,000 repairs. So now you're down to 155. And if you want to wholesale it, you're down to 130, you want to make 15K on anything, that's where your number is. And that's not truly where our numbers are. Cause I think we were looking at, we could probably sell this thing 120 to 130 range in the wholesale. Am I right on that one? I think that's kind of where we were with it. And then we'll make a quick, 20K on it. And then if not, we wholesale. If we don't get our number when we list this thing, if we don't get our 130, we say 125 to 130 number, we're probably just going to wholesale this.
Yep.
And then move on and go with that one, especially in this market. And I still don't see this market changing a whole lot over the next, 6 months or so. So we should be able to do that and move it.
Yeah, I mean, it's a key point after we just walked through that Florida example. Don't be a one-trick pony with your exit strategies. Just don't be a rehabber. Just don't be a wholesaler. Just don't buy rentals. I mean, just look at it from multiple lenses and what makes sense to maximize your profits. I mean, that's how we go about it, at least.
Yeah, have a lot of tools in your tool belt is the most important thing. You want to be a diversified investor, right? If you buy a portfolio of stocks, you want to have 10 to 15 good ones in there. You don't want to have just 2 or 3 that you're banking on and hoping, right? Hoping one of them goes up or whatever. You want to have a nice diversified portfolio. So in this investment space, we always think, what's the highest and best use case for this property? Is it owner finance? Is it wholesale? Is it wholesale? Is it fix and flip? Is it a rental? So we look at all those different things. And, if you're in a market, let's say we bought something in a Raleigh, North Carolina market, for example, which is becoming another Silicon Valley and the prices are starting to go up there. if you're looking at, all right, that might be a good market, long-term hold. I'm going to hold this for a few years because I think that market's going to continue to increase because the jobs going there and the demand for that market will go up. Then that's a good area to potentially hold, as compared to fixing and flipping, as compared to wholesaling it. But, it's going to be hot no matter what you do, but that should come into your mind. Like, yeah, if I hold this one for a few years, I might make more.
Yeah.
If you can afford to do that. And then you have a mixture, you have another one that you're wholesaling, you have another one you're fixing and flipping. So it's blending everything there. And we try to teach you guys that in our educational space. We try to teach our students that exactly, what the best use is for this property for them. That's one of the things you get with us if you decide to come and join REO Auction Academy or the virtual investor here. So do you have anything to add on top of that, Mike?
The only other thing is, I've been seeing a lot lately, like everyone asks, like, what are the top markets to virtual investment?
Yes. Yep.
I'm going to start with like, what are the ones where
Avoid.
Avoid. It's maybe over competition. If you go onto like a real estate investor forum, there's a bunch out there, REI Club or, Bigger Pockets, etc. Top question always is, OOS, they use this phrase, out of state investment, I guess. Yeah. So it's and they're like, what are the best markets to go into? It's the same 4 cities. Like,
yes.
I could almost guarantee you what it's going to be said. It's going to be Columbus, Cleveland, Memphis, Indianapolis, and now you see KC, Kansas City, Missouri a lot as well, and then Huntsville, Alabama is another one. Like, those are like the big 5 where I feel like that. I mean, we used to do some of those markets, but those are just over competitive probably right now, because I think all these newer people are just flooding to based on some online form. So people are just tripping over, themselves trying to get properties.
And those are the markets you definitely want to avoid. You want to go where the crowd is not at this point, right? Look for a future. Where are businesses looking to move to, or where do you think businesses will be going to? And what is a nice area that is trying to draw them in, right? And there's obviously a lot of markets in Texas that are drawing people in. Florida, Tennessee, Nevada, they're all drawing businesses into these different markets. Even Wyoming is doing the same thing. So those are the markets you kind of want to concentrate on, the ones where you see future growth.
Yeah. I mean, I guess Cleveland is a good example for us. In 2016, 17, 15, we hammered that market.
We did.
We did a lot. Counties and townships and all the point of sale stuff, because we went through all that. And then we saw outside money starting to come in, even though we were outside money, but even more like investors.
Hedge funds.
Flocking to the area. And like, we couldn't win anything. We're like, how did this property get sold for that much? You know what I mean? So it's like, we stopped investing there and we pivoted and found a better market with less competition.
Yeah.
But you continue to see the popularity in those markets that I just mentioned.
Yep. And then, the hedge funds will buy like crazy. These markets run the market up. Should they decide that they want to start selling in that market, then if you're in that market with them, you're going to get hit, right? Because that's going to be a big drop. And they may hang on to them for long term, but there's a lot of them that they sell off. Like, they were buying up Jacksonville years ago. Do you remember that? 2013, they were buying it like crazy. Now they're selling some off down there. So it's not killing the market or anything like that. The market's still good down there, but they're selling some off and they're shifting into different markets. And I think they're going into ones where they're trying to get even more growth potentially. Yeah. They just aren't buying as much in those certain markets anymore. They're probably going to go to the Raleigh, North Carolina, or some of these other ones. But, markets like Waco, Texas have always been good for a very long period of time. And I think Waco is about an hour and a half outside of Dallas. So if you see Dallas continuing to grow, which I anticipate this to continue to grow, that should be a market that continues to grow too. And it has grown a lot over the past couple of years, but it's still a bargain. It's still a place where you can buy cash flow rentals. It's still a place where you can fix and flip and do wholesaling. Matter of fact, one of our friends, Stinson Bland from Investor Fuel, he's heavy into that market, doing extremely well with it. So it's definitely a good market to be in. And those are the type of markets you kind of want to concentrate on. Albuquerque, New Mexico, right? Not a lot of people talk about it, but man, is that a great cash flowing market. I've talked to a few investors who are killing it in that market, pick up things pretty inexpensive, but there are bad areas in that as well, just like there isn't any bigger city. But those are good markets that aren't on that top 10 list, say, or top 5 list of markets to go and invest in long term. So that's kind of our recommendation. Steer clear of the ones that you see on Money Magazine or Fortune Magazine or any of these, and do your own due diligence, do your own homework, because there's a lot of resources you can use online to see where people are moving to without having to go off these guys, because these guys are usually going off numbers from last year. So last year's numbers maybe change for this year. People change habits. So it's one of those things. Got to always kind of keep on your toes and know where things are going.